2020, what a year. I mean, we've obviously Hong Kong had come off the back of the protests, and then next thing we had COVID. So we sort of had this situation where the market really came off in terms of value and obviously sentiment. So initially I was thinking, gosh, we may not do any business all year, and it might be like SARS, which, really the business, everything shut down for sort of a good 8 months and nothing happened. Where I think here, because the COVID went globally and it wasn't just an isolated Hong Kong situation, people suddenly saw value in the market and came back in the market and started buying. So on the sales side of things, we've actually had a very strong year. COVID has really softened the property market and really dented sentiment. It's made people very nervous. So while I think some buyers have viewed the market because it's come off at probably 15% as a result on the sales side of things, while some buyers have seen that as great value to get back in the market and particularly buy for self-use, a lot of buyers are just too nervous. A couple of things have happened. I think as the year has gone on, I think everyone feels, understand it's a global thing. Hong Kong actually now, compared to the rest of the world, looks very safe and much more stable. And I think that's given also buyers a lot more confidence to start buying again in Hong Kong. Along with other things, now there's the talk of a vaccine, there's been a change in US politics, so there's a whole lot of factors that are starting to, I think, help build sentiment again in the sales market, and we expect that sentiment to continue on into 21. So the buyers in the market, it's definitely local Hong Kong Chinese-based buyers who have been buying for self-use. They're seeing value in the market, and what COVID has also done is make some properties that probably wouldn't have been on the market have come to market at quite good pricing. That's been great for some buyers, and the market's been busy. But other buyers, for instance, mainland Chinese buyers, we just have not really seen them in the market this year, and that is primarily because they can't get into Hong Kong with the borders closed. What we've definitely seen as a trend this year is buyers looking for things that are beautifully renovated. People want a bigger house that they're going to buy because they realise they're spending a lot more time at home, they're entertaining more at home, they realise they can't travel. So all these factors are really becoming more important. The whole of the south side, to be honest, Repulse Bay, South Bay, Stanley, their values have held up quite well, and I think will continue to increase, and a lot of it's lifestyle. 2020 has really shown us that with everyone staying at home so much and not traveling, that there's a huge focus back on outdoor space and home entertaining, views, the beach, hiking. It's all about lifestyle suddenly, and being at home and entertaining at home. And I think the one thing the south side of Hong Kong really has to offer for people is all those things with really easy accessibility. Rents have come off between 15 and 20%. Everyone's moving around. I mean, everyone's suddenly back in Hong Kong, everyone's priorities are changing, everyone's taking advantage of the decline in rents, and they're either downgrading to save money or they're upgrading, putting more money in their rent to sort of adjust to this whole new COVID lifestyle. I think the hot spot on the rental market is between sort of 40, 50,000 up to 100,000. This is now the most typical budget in the market. So we're seeing actually a lot of competitive bidding in this, particularly around the 80 to 100 mark. Very, very popular budget. Well, hopefully we'll improve from 2020. I mean, it should stabilise more. I think the market, the trend on sales, I think will continue. I think we're definitely got a lot of buyers starting to talk, and investors. We're starting to see investors come back in the market, looking for yield with lower tolerance on yield. And I think just sentiment has improved. I think we've come out of the bottom of where the market was probably, the second quarter 2020. And as we move out of that, and with low interest rates, while it will still be quite flat the first half of the year, I expect by mid-21, we expect to see the market start to trend upwards again.